All right, so for today's video, we're going to take a break from our traditional trading videos where we talk about trade entries, strategies, and we talk about the profits making in the markets. And instead, we're going to take a step back and talk about structure, and not just structure, but also breaks of structure. These are very important concepts of technical analysis all traders must understand. And these are elements that I apply in all of my trading videos. In fact, it is these elements that help me verify points in the market for entering my buys and sells that, as you've seen from my videos, have allowed us to capitalize some significant profits. And I want you guys to understand this so that way you can take advantage of these elements yourself. Now, of course, we like to try to keep things as simple as possible. So sit back, relax, take some notes, like and subscribe if you gain any value. And with that said, let's hop at the charts. If you have any questions or need help, feel free to comment down below. And if you just enjoyed today's video, want to share with us your feedback, we would love to hear from you. Comment down below. But of course, you can also reach me more directly, either via email or Telegram. You can access all of my official contact information down below in the video description, where you can also access all of our other trading resources, ranging from links to free demo accounts and brokers and prop firms that I use specifically for trading gold that provide various benefits, including up to 90% payouts, our VIP signals chat, so you can follow, copy, and profit from my own personal trades, auto trading, where the trading is done for you, allowing you to earn passive profits in the markets. And we also have our trading group where I personally teach how I trade these markets, as I'm about to show you today, so you can learn and make money as you are learning and improving on your skills. Again, all of that and much more can be found down below. So there are three forms of structure you're always going to see in the markets, and that is uptrends, downtrends, and consolidation. An uptrend is where price is going up. Downtrends are where price is going down. Consolidations or range of markets are where price is moving sideways. Now, when it comes to the concept of structure, there are specific formations in order to create an upwards, downwards, or consolidating structure. In an uptrend, we have these higher peaks known as higher highs and these lower peaks known as higher lows. In a downtrend, we have these higher peaks known as lower highs and these lower peaks are lower lows. But in a consolidated or range of market, price is simply moving in between the level of resistance and support. So the benefit of understanding market structure gives you the idea of understanding what type of bias you need to be focusing on for your buys and sells. All right. If you're in an uptrend, most likely you're going to be looking for buy trades. If you're in a downtrend, most likely you should be looking for sell trades. But in consolidated regions where, again, price is bouncing between the level of resistance and support, a lot of traders like to take advantage of these areas to capitalize on both buys and sells. Now, as a general concept of trading, when it comes to our buys and sells, we buy at levels of support and we sell at levels of resistance. This is very important to understand, especially for beginners, because again, when we understand the structure that we're in, that's going to determine the trades we're looking for. So if we're in an uptrend, we should be looking for buys. Where should we be placing our buys? Do we buy at these peaks? No, we prefer to buy at these valleys, right? The lower valleys. If we're in a downtrend, where do we want to buy? Down here, these lower valleys, or in these peaks? At the peaks, right? Right over here. Like I just said a few moments ago, we buy at levels of support, we sell at levels of resistance. So if we're in an uptrend, our higher highs are a formation of temporary resistance where price is pushed back down to a point of the market, creating a level of support known as a higher low. A higher low is a level of support created by a temporary pullback in the market before continuing in its upward trajectory. In a downtrend with a lower high, a level of resistance is created from a temporary pullback in the market before continuing in its downward trajectory. So when we say we sell at levels of resistance and buy at levels of support, where do we want to buy in an uptrend? At the higher lows. Where do we want to buy in a downtrend? At the formation of lower highs. Now, what's interesting about lower highs and lower lows and higher lows is that in most cases, these areas complement each other as forms of support and resistance. What do I mean by that? Again, we've established the creation of a higher high is a level of resistance before the pullback, right? After this pullback, continuous upward trajectory, creating a new higher high before another pullback, creating a new higher low. And in a lot of cases, that new higher low, which is a level of support, will complement a previous peak of resistance created by the previous higher high. Same with the downtrend. A lot of times, these lower highs, which is a formation of resistance, complements a level of support from a previous lower low. So again, when we talk about buying at support and selling at resistance, in a downtrend, we want to buy at points of resistance, preferably at the formation of a lower high in anticipation for the price drop. In an uptrend, we want to buy at levels of support at the creation of a higher low in anticipation for the price to continue upward. So now that we understand structure, let's talk about a break of structure. So when the structure is bullish, right, in an uptrend, we have our ascending trend line connecting our higher lows, which remember that ascending trend lines can serve as a diagonal form of support. So as long as price remains above our trend line, the structure remains bullish. In a downtrend, we connect our descending trend line by connecting the lower highs. So a descending trend line can serve as a diagonal form of resistance. So as long as price remains below our descending trend line, the structure remains bearish. So when we have a break of structure is where we start to see price breaking out. In this case, we're talking about an uptrend. A break of structure entails where price starts to break out of our ascending trend line. And instead of creating, higher highs and higher lows, we're going to start to see a possible retest and a formation of lower highs and lower lows. So this is a generalized example of a break of structure for an uptrend. So with a break of structure for a downtrend, this is where we start to see price breaking above our descending trend line. In a lot of cases, you'll have a retest. What was resistance, right? A descending trend line is resistance, might test it as support, and instead of creating lower highs and lower lows, starts to create higher highs and higher lows. So whenever we have a break of structure in a trending market, these are indications of a potential change in trend, right? So if you ever wonder, how do we know when a trend is going to end? By identifying these breaks of structure. Now, in a consolidated market, again, where prices range in between a level of resistance and support, a break of structure in a consolidated market happens whenever price breaks out of a resistance or below a support. Now, if you're in a consolidated market and price, let's say, breaks below your support, a lot of times what you'll see is price retrace back to that level of support before continuing back down. And what this is referred to, folks, is a retest. What was previous support now serving as resistance before breaking down to lower levels. The other scenario, if price were to break above your resistance, in a lot of cases, price will come back down temporarily, test this level, what was previous resistance, to serve as support before continuing in its upward trajectory. Now, one final tip I want to share about breaks of structures, and then we'll hop into the charts and show you some examples. In a lot of cases, whenever we have a break of a trend, right, whether it's an uptrend or a downtrend, it won't always be as clean as, a break from our ascending trend line or descending trend line. A lot of times markets will chop sideways. So just to give you a little bit of an illustration, what price will do before there is a break of structure is, let's say we're in an uptrend, it'll test our ascending trend line and then just kind of do this. Now, what does this look like? This looks exactly like our description over here, consolidation, where it's forming a level of resistance from the previous higher high and a level of support from the previous higher low. Needless to say, this can also happen in a downtrend where price might, come back to our descending trend line and then just move sideways for a bit and consolidate and range in between a level of support and resistance. So remember what I told you about consolidation, where you need to wait to see if price is going to break through the resistance or below its support. If you're in a trending market and you start to see price consolidate, wait to see if it'll break above or below your levels of support and resistance, because this is going to dictate whether the trend is going to continue or reverse. If you're in an uptrend, price starts to consolidate and it breaks above your resistance, this is a sign of a trend continuation. But if price were to break below your support, this could be a sign of a potential trend reversal, where you were once in an uptrend, now you're most likely headed in a downtrend, right? So in a downtrend, same thing. If you're in a downtrend and price is consolidating and it breaks above your resistance, this might indicate a potential trend reversal where you were once in a downtrend. Now you're most likely headed in an uptrend. But if it breaks below your support, this might indicate a potential continuation in that trend where price will continue downward. This is why it's so important to be patient, because identifying these areas in the market, or I should say these conditions and scenarios, is very easy, but it's all about being patient. So let's hop on the chart and identify some examples of structures and breakup structures. So as many of you know, I like to trade gold. It's virtually the only asset I trade. So we're going to just stick with the gold chart. But again, folks, you'll be able to find these types of examples in any asset you're trading. This is the current price. This is not some cherry-picked area in the market. And so right here in this range, we can see a lot of different examples of uptrends, downtrends, consolidations, and breaks of structure. So just looking at from where the current price of gold is, if we look here to the left, we can see an uptrend. Why is this an uptrend? Because we can see prices creating higher high, higher low, higher high, higher low, higher high, higher low, up until this point, right? Respecting our ascending trend line up until this point here where it broke below it, now creating a downtrend with formations of lower highs and lower lows, right? So here we can see this peak of a previous higher high is the start of the formation of a downtrend where we're now seeing lower highs and lower lows. Now, we also have an example of a minor area of consolidation. I'll zoom in a little bit. Whereas you can see, as we were still in this uptrend, price came in, consolidated in this area between this level of resistance, these areas of support, until breaking below not only the support, but also below our descending trend line. And as a result, creating a new form of structure of lower highs and lower lows, thereby changing the trend from an uptrend to a downtrend. Now from here, we have the breakout of our descending trend line, but price didn't immediately shoot up, right? It tested this descending trend line, which again, descending trend lines are diagonal forms of resistance, but as it broke out of the descending trend line, it is now testing this descending trend line as a level of support. And by doing so, started to create this bullish structure, which as you can see from this lower peak, and this lower peak, each peak higher than the previous, creating higher lows. If we look at this peak, and now this peak where current price is, each peak is higher than the previous, creating higher highs, which in fact is now creating a bullish parallel. So every time it touches this lower level, it serves as support, pushing price up. Every time it comes up here, it pushes price down, serving as a level of resistance. Leading up to the area of current price, coming down to a smaller time frame, what do we see here, folks? We have an uptrend, right? Price is creating higher highs and higher lows. This is bullish structure up until it reached the upward part of our parallel, serving as resistance. And what did price do at this peak? It ranged, it consolidated. It bounced between this level of resistance and support until eventually breaking below our support and our ascending trend line, thereby breaking structure. It broke through our support, broke below our ascending trend line, and if we come down to a smaller time frame, we can see that it even retested, right? It broke through, retested what was support here, now serving as resistance, failed to close back in, and as a result, push price even further. So this is what I mean. Literally all of my trades that I have shown in previous and in future videos are a result of paying attention to structure, paying attention to where market is reacting from, a level of support, a level of resistance, and buying and selling at those points. All right. In this uptrend where price is creating higher highs and higher lows, these are all areas where you could have capitalized on buy trades. In this ranging area, because it's bouncing between a level of support and resistance, you could have sold and made a profit every time price came up to this resistance, and you could have bought and made a profit every time price came up to the support until we had a breakout. This is where we got to be patient to see if this was going to be a trend reversal or a trend continuation, which is evident. Broke below our support, retested it as resistance, continuing down, indicating a trend reversal. Now, is price going to come down to this lower level of our parallel and serve as support for potential buys? We'll have to wait and see, because again, folks, trading is all about being patient, waiting for the market to come to our areas, and we react accordingly based on what the markets are showing. Like I say so many times over, trading does not have to be complicated. At the end of the day, all we're doing is looking for trends and areas of support and resistance to base our buys and sells from. And it's by following these very basic concepts that can help you become a profitable trader. This is one of the many concepts that I teach within our trading group, alongside with dedicated modules on my own personal strategies on how I trade gold, as I shared with you today, allowing beginners and struggling traders to make money as they are learning and improving on their trading skills. So if you want to learn more about our trading group and our VIP trading room, you can visit our website or click the links down below in the video description.
All right, traders, that concludes our video for today. Hope you gained some value. Again, if you have any questions, reach out anytime. Don't forget to check out our trading resources down below in the video description. If you want to watch any of our recent uploads, you can check out these recommendations. Thanks for watching. We'll see you on the next one.